You're the only man with smile.
You make us smile, Nikunj.
They say good investors love bear markets because you get stocks to buy. I mean, are you feeling the same? That, oh, it's a bear market, let's start buying stocks?
I mean, I don't know about the bear market, but clearly, obviously, there's been a very sharp correction, and a lot of stocks are coming towards a very attractive kind of level. The big question is that how long does the uncertainty last? How long does this volatility last? Because clearly, the tremors or the echoes of what's happening probably will be felt for some more time. This is really not like kind of a one event which just comes and goes. This is not like COVID, where all the governments put together collectively worked towards solving the problem. This is not like 9/11, or this is not like the 2008 crisis, where all the central banks worked collectively together to pretty much find a solution and take on the challenge. This is an era of unilateralism. Lots of state actors at play out there globally. So it's going to take some time for things to essentially kind of settle down and normalize. So it's not about, really about valuations or stock prices. It's honestly more about how long this uncertainty lasts.
As an Indian investor, Nilesh, what should one do? It's a little late, I guess, to throw in the towel, but you're wondering whatever little profits that you're sitting on, do you need to exit that as well? And, just sit on cash, wait for this uncertainty to subside whenever it does, because unfortunately, it's not in our hands, really. It's now seeming to be a very EU, China versus US kind of story, and that's going to dictate the global growth trajectory. And, you're wondering what really to do because it's really uncertain.
Yeah, no, I don't think this is a time to kind of take really cash calls. Clearly, a lot of stock prices have fallen and fallen meaningfully. And it's always going to basically very difficult to really call the bottom. We also have to keep in mind that typically markets do tend to bottom out way before you see any improvement in the fundamentals or any improvement in the earnings. To that extent, we have to bear that in mind that markets can bottom out way ahead of things normalizing. So I don't think this is really a time to necessarily sit in cash. I think it's time to be constructive. It's time to be proactive. There's a lot of the fear, uncertainty, which is basically kind of getting factored into stock prices. So to that extent, I think this is a time to kind of go back to the drawing table and see what kind of an impact one sees in terms of this whole new tariff regime that is unfolding, or a possible global slowdown, or a possible recession in the United States. And in that context, one has to essentially keep evaluating sectors, one has to keep evaluating opportunities rather than necessarily be tied down by the direction of the market.
Hi Nilesh, this is Shrishti also joining in. So when you say that it's not a time to sit on cash and maybe it's time to go back on the drawing board, help us understand that which are the sectors that one should be looking at this point in time, because just after this near-term dust settles in or the volatility actually settles down a bit, which is the place that investors should go and hide at this point in time in the near term, and the long-term opportunities, where are you spotting?
So a few things. One is clearly that in the recent times, a lot has been done to put more money in the hands of the consumers. The tax breaks that were announced in the most recent budget, the kind of direct benefit transfers that are happening through various schemes of the state governments directly in the hands of women, is all leaving more disposable income and more spending power in the hands of Indian households and in the hands of Indian consumers. On top of that, with a steep fall in crude oil prices, raw material costs essentially are going to be lower, which will drive margins. So the best place to currently be in is the consumer space. And consumer space is totally inward facing, or is dependent on domestic demand. So there is basically a potential for consumer companies to essentially grow revenues and to expand margins and therefore to drive earnings. So that clearly is one space. The second space essentially are the digital platforms. Digital platforms, again, are powered by both rising consumer aspirations, urbanization, and digitization. All three put together, I think, are a great combination. So a lot of the digital platform businesses are unaffected by what's really happening. So I think that's again one more great place to be in. The third is the opportunity around infrastructure development and industrial expansion are again a place to be. They don't get affected by what's really happening globally. And that's really where the role of the government will come in terms of both a policy regime towards tariffs or to promote asset creation or to promote infrastructure development. So that's again going to be a great. So all these pockets or set of opportunities really are not dependent on global growth or what's happening in the United States. So clearly believe this is a set of these kind of opportunities are a great place to be. And on top of that, again, financials are again a domestic-led opportunity. So I think there are a whole bunch of opportunities which are coming in, and the current market kind of correction or a meltdown is basically, I think, creates several opportunities.
If world slows down, decision making will get delayed. Look at government spending as an example. Because of election, it got delayed. It took 1% out of India's GDP. Right now, if we speak to corporates, they're saying we've stopped production. We don't know where to expand. We don't know how to expand. The sentiment is not great on the capex side suddenly at a global level. So it's a matter of time. It will start biting demand, supply, or for that matter, even fresh capex. Won't that hit us then?
So in terms of consumer demand, I don't see that getting impacted. And we also saw during the COVID period that people thought people would sit at home and there would be no demand. But look at it. I mean, yes, it lasted for a few months or a few quarters, but after that there was essentially a very, very sharp, I would say, revenge shopping which happened. But I really don't see these set of events to actually impact consumer-led demand or the consumption-related sectors. So to that extent, I'm less worried on that. I totally agree that maybe private capex is something which might basically take a backseat as companies and managements basically wait for some more clarity and see how this uncertainty essentially is going to settle down. It's also going to wait for different policy responses as well. But these are some things which I don't think will take probably more than a quarter or two to basically iron out. So yes, maybe for a quarter or two, there would be essentially some pullback in terms of investment-led demand or capacity creation, if I would kind of use that phrase. I probably think, yes, there will be some setback, there's some pullback, but I don't think it's something which is going to get permanently impacted. I think clearly over in maybe 1 or 2 quarters from now, you actually will see corporate India sensing this actually to be an opportunity where now, because the tariffs on India, the tariffs imposed on India are relatively less compared to our Asian peers. And maybe there is essentially once again a very massive export-led opportunity for manufacturing companies. And I'm reasonably confident that this is going to be more an opportunity, and corporate India will turn this adversity into an opportunity along with support from the government. So I'm not too worried on that count as well. It's probably a question of a couple of quarters, but post that, I clearly think you're going to see again growth come back and an all-round comprehensive growth come back.
Expect anything magical from Q1 earnings season, or it's going to be nothing short of disaster? Because I mean, I'm with corporate India when they say that we don't know. If they don't know, how will they tell us?
Yeah, no, I think it's too early. I think this whole development is barely a week old, so it's still too early. I probably think yes, maybe in a couple of weeks from now we'll have more clarity, but I'd probably say that it will still take a few months for clarity to emerge. Keep in mind that I think the timelines which were set for a bilateral trade agreement with the United States was something like September, October. Maybe this development pretty much expedites that process. It fast forwards that process. So it's quite possible that it may not even probably last till September, October, but that's a reasonable time frame. I would put basically for a fair bit of clarity and uncertainty to emerge. In between, we are also kind of been an era of lower inflation. We could be in a period of lower interest rates. And all of that will actually act as some kind of incentive for corporate India to basically take very concrete action plans. So while I agree that it's going to be a little more calibrated, But maybe after the initial J curve in terms of a decision making, you will essentially see then corporate India beginning to accelerate and have their eyes set on the global opportunity, which is now emerging because of this event.